Give me a couple more minutes. Martin, Bob, Mario, Fred, Victor, Lalit, Fred, John, Steve. All right. All right, let's see. Hello, not sure why. Okay. Okay, let's invite Discord, guys. Sure. All right. Cherry blossom there. All right. Thank you for waiting. Let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and co-founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. Do we have Alon? Let's see. Alon is there. So welcome on Discord. Welcome on YouTube. Please hit subscribe button, like buttons, and follow us if you like the content. For those of you who are new, welcome. This is my brief bio. I think the main difference between Tradespoon, Yellow Tunnel, and other services is that we're very focused on financial engineering. We have a team of financial programmers, financial engineers that are building models and enhancing existing algorithms to find opportunities in the market. And at the same time, I use these signals in the live trading room to trade. Right? And we have Keith and we have Scott that also provide a lot of educational content. So not only we're a technology firm, but we also do the live trading room and provide the content to help you trade. Disclosures are very important. We've been doing it for many years. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or equal past performance. You can see the relationship between Tradespoon and Trading Block on the bottom of your screen. All right. Trading psychology is important, right? So I encourage you to have a trading plan. Write down the rules in your trading plan and keep a journal. And every trade, have a checklist. Before you place a trade, have a checklist that corresponds to your trading plan to make sure you're not breaking any rules. Most important rules in trading, I think, risk management. So I still propose, on average, 30% of your portfolio to be in cash in case market pulls back again, 5-10%. You want to be ready, and so you have cash to deploy. And second is portfolio drawdown. Have 4 positions, no more than 2.5% of exposure per position. This way, you know your portfolio drawdown is 10%, right? If you have 4 bullish positions and they are correlated to S&P, if S&P drops 10%, 4 times 2.5, then your portfolio is down 10%. And you can hedge your portfolio. Instead of all 4 bullish positions, 1 or 2, based on your opinion on the market, could be bearish, right? You can buy gold. Gold is breaking out. You can buy treasuries. Treasuries has been a popular trade, at least in the past couple of months, as a hedge for market pullback, and or inverse ETFs, right? If you're not comfortable trading gold or TLT, you can just buy inverse spiders or inverse SH for inverse spiders. All right, and these are some of the other important parts of the trading plan. You can download this on Tradespoon. We have this trading plan available in Educational Center. So some of the other points to consider, right? 4 positions, 2.5% of account value. Be long and short the market at the same time. You can use option spreads to be long and short the market. You can do cover calls. You can do mirrored puts. They all give you certain amount of hedge, and give yourself more time, right? Probably September already is too early. The goal is to close September positions and roll them into October or start October positions, and allow more space, right? Use 50-day moving average as your stop loss if you carry position, overnight, or hold it for a few weeks or a few days. Use 50 days moving average, right? That means you just downsize your position. All right, let's look at the key support and resistance levels. So model runs every day. This is our stock forecast model. Doing a good job finding kind of trends. Right now it shows that spiders is back in uptrend. It showed in a downtrend. Now we have a confirmed uptrend. It is overbought. Stock market is overbought, but for today it sees 555 is your support, 562 is your overhead resistance. So let's look at that. And compare. So if you're doing short-term trading, let's look at the spiders. So we had just as fast as the stock market went down, just as fast we have a V-shaped recovery, and we're already close to all-time highs on spiders. So if you look at the 1-hour chart, model sees 555. 555, 552 is your support. This is the yesterday's open print, so it makes sense. So I would say 555, and this is the previous rally back on August 1st, back on the first rebound. So 555 is important support level. I agree with the model for short-term trading, right? If you're doing day trading, because if we break through that level, if we break through the yesterday's open print, then the next support is the gap, right? Bears will try to break the gap. So this is your support. 555 is your support number 1, right? And then somewhere between 548, 544 is your support number 2, right? The bears will try to breach the gap. And then after 544, we have 538, support number 3. So those are your important levels. If you're doing day trading, I would use maybe 1%, right? 5 points as a stop loss. If you're doing longer term trading, I would use 10 points, right? If you're holding position for a couple of days or even a week, maybe 10 points. If you're holding position for a few weeks, I would definitely use maybe, I would use 5 we know that 540 strike is pretty well positioned, so I would use right below that 538. Right, so 538 is 20 points, 20 points stop loss. So those would be my stop losses based on how long you usually hold the position, right? Short term, couple of days and weeks. If you're thinking about hours, it's support number 1. If you think about days, then support number 2. And if you think about weeks, support number 3. And $250 on $10,000 account, I wouldn't risk more than $250. So this is 50, 25, and 12. So position management is important, right? The size of the position is important. The number of positions are important. This is something everybody has to decide for themselves. There is no magic number. But especially if you're new to trading, I would say 4 positions, no more than 2.5% would be a good way to start. And you can slowly grow maybe to 6 positions once you're more confident. Maybe based on your experience and portfolio size, it could be 1.5%, maybe 3%, but that would be my thought process on the risk management. QQQ is up, spiders are up, small caps are up. Let's see if there's any interesting observations. So small caps are kind of, you can see they're losing momentum. It's kind of similar here. It didn't go anywhere for a week or so, and now it's overbought. So not going anywhere for a few days. 50% retracement. I do have a credit call spread. For now, I'm holding. I think next event is the Jackson Hole meeting. Right? We can't forget about that. Let's see what we have today. Today we do have 8:45. So in 15 minutes we have services PMI and manufacturing PMI. Right. So again, if they're very weak, then fear of recession. If they are big jump to the upside, fear of inflation, right? And the Fed is going to hold the rates longer. If it comes in with an expectation, then market moves in same direction, right? Market continues to move higher. So that's an initial jobless claim. Same thing. So we're now driven by macroeconomic data and geopolitical risks, right? So sorry, that's Thursday. Sorry, we're talking about Thursday. Today's Wednesday. So today, meeting minutes, right? So today, Fed's meeting minutes at 2 p.m. Kind of surprises. Market could move. I assume there are no surprises. We already know what Fed said before. But people could read into individual, committee members and make inferences that September is on the table or off the table, 25 basis points or 50 basis points. Market is overbought right now, so it could react to that. So we'll see. Tomorrow is initial jobless claim services, manufacturing PMI, which is going to be important for the market. And then Powell's Jackson Hole speech, probably the biggest event of this week that can drive the market up or down. Interesting observation is that gold continues to, let's see. Yeah, so it broke out, right? Day 1, day 2, day 3, day 4. This looks like it broke out of the at all-time highs, right? And gold usually breaking out either fear of inflation or fear of recession, right? But people don't buy gold, right? Also, TLT is going up, right? At the same time, right? So TLT is close to 2024 high, not there yet, but close. Even though we haven't even started lowering interest rates, right? But there's a big anticipation that we will. And since May, kind of reversal, right? We have a downtrend and now we have uptrend, right? Since May, we're in strong uptrend in treasury. So gold rallies, treasury rallies, and spiders rallies, right? Usually, at some point, something has to give, right? You don't have these asset classes going higher in the same direction, right? Usually, either people are going to start selling bonds, or they're going to start selling spiders, right? And I guess I usually like to look at the bond market. I think bond market is more accurate, but I guess that could be a possibility where we're infinitely buying. Just like on the way down, we were selling stocks and selling treasuries. Now everybody's buying bonds and buying stocks at the same time. But that's more of a recession trade, more inflation trade, right? The reason people were selling stocks and selling bonds because of fear of these interest rates increases, right? When it started 2 years ago. So in the beginning, people were selling stocks and bonds, selling everything, right? So that was kind of a fear of rising interest rates and inflation. Now, when nobody's concerned about raising interest rates, at least not a majority of people are not concerned about interest rates raising, and inflation looks like trending lower, right? It's going in the right direction based on CPI and PPI data past couple months. So I think this is a kind of a sign that at some point either people are going to start selling bonds or they're going to start selling spiders. I think it's the spiders, the latter, but obviously this a head scratcher in terms of how quickly we were able to rebound. Okay, VIX is kind of grinding higher. It reached 14 level. We're grinding higher, even though QQQ is also grinding higher. That's also kind of, you see these dislocations or these anomalies kind of could be a warning sign. What else is interesting? Nikkei, right? Everybody looks at Nikkei. Actually, what people are more concerned on Friday is what the Bank of Japan will say, right? The ministers of Bank of Japan will say versus Powell, right? Because it's still unclear what's going on with interest rates in Japan. Last time they raised interest rates, market just fell apart. So, it'll be interesting to see what they say and how the market will react. Could be an event, but we'll see. But for now, Japanese Nikkei is above 50-day, below 50-day, but above 200-day moving average. It's the April break. It's right at the April lows. Crude oil, also steep sell-off, right? That's usually, despite geopolitical risk, crude oil is lower. I think the probability of Iran retaliating kind of diminishes as time goes on, which is, thank God, there is no escalation in the war in Israel. So that's a welcome news. And crude oil is down. And again, why is it at 12 months low, right? Or I don't know when. We're at 2024 lows. Usually not when the economy is expanding, right? Usually when the global economy is contracting, companies need less oil. So crude oil, but sitting at oversold, right? It's oversold. Probably good. If this level holds, then it could get back to 80. So crude oil is a good indication. And Bitcoin is also, right? Bitcoin is usually pushes the market forward, right? The proxy for risk taking. And QQQ and spiders are all-time high. You would expect Bitcoin to be at all-time high as well. Especially with the red wave and, Trump's running mate, Vance, pro Bitcoin. So that could be another sign where, things don't make sense. And maybe liquidity issues summer and stuff like that. All right, any questions? Well, Mark, welcome back. Cherry Blossom. John. Yeah, bad economic news are now bearish and good economic news are bullish. Right, we're back to normal market or normal market reaction. The only abnormality now I see is that TLT is going higher since May and QQQ is not very normal for stock market. Yeah, usually people either buy bonds or they buy stocks. When people buy bonds and they buy stocks, that doesn't make sense, right? Just like it didn't make sense that they were selling stock and selling bonds, right? So we'll see how long this trade will continue. Is dollar going? There is a lot of debate, right? Thank you. I forgot about dollar. There is definitely a lot of debate about dollar. On one hand, dollar is great. Weak dollar is great for multinational companies, right? Because if they derive revenue outside of the United States, in Europe, then they can bring and the euro is strong. They can bring that extra cash into their balance sheet. So usually weak dollar is good for economy, and usually if there is some kind of dislocations, right, during COVID or initially when the market sells off, dollar also rallies. So weak dollar, I think, is good for the market. Nobody was buying, Japanese bonds and using that those proceeds, because they are, very low interest rates, and they were using that money to borrow Japanese yen and, buying assets in abroad, right? So that's and Japanese yen kind of, I think it's consolidating, right? But this is a very strong move to the upside, consolidation. Probably another move to the upside, right? So if I have to guess, Japanese yen is not done rebounding because it's still kind of very oversold, even if you look at the weekly chart. Sorry, not month. But yeah, if you look at the monthly chart, since 2011, this is extremely oversold, right? It lost half of its value. So for these are the 2 months it's going high, it broke this downtrend. It could go to, next level is probably 75, right? 72. So if Japanese yen continues to rally and dollar continues to sell off, and we start having these another dislocations, that could be the risk into the market. So just like most of the time, there's bullish interpretation and bearish interpretation. Right now, every time yen moves higher, market sold off, right? Lately, it's kind of not going anywhere, so market rallies. But I think if we're going to have another leg up in, hit 72, 73 on FXY, right, on Japanese yen, then that could be bearish for the market. All right, let's look at the earnings. We didn't have anything interesting after the close today. So Target, Macy's, TJX, so retailers. Let's see how Macy's was down last time I checked, 10%. Let's see. Has they recovered any of this? No, so Macy's is down 12%, right? Macy's down 12%. They continue to struggling with their inventory. Target is the opposite reaction, up 15%. And TJX is up 6%. TJX continues to lead the retailers. Right? So TJX and Target doing well. Macy's continues to struggle. Let's see. ADI, analog devices, is another one. Semiconductor. Up 3%. So ADI, I guess, wasn't great, wasn't horrible, but better than expected. So it's up 3%. Any questions on earnings? Toll Brothers had a pretty good earnings too. Thank you, Bob, for sharing. Okay, Toll Brothers are close to all-time high, up 4%. Thank you. Rosser, video, I think video is good. Let me know if you can see. I apologize for yesterday. All right, well, Discord team is back. GoToWebinar is also back. Not as many people as before, but I assume people are on vacation. I drove my kid to school today, so schools are starting back. Drove girls back to school, college, so it's going to be quiet in our household. All right, what happened yesterday? So Walmart, I'm out of Walmart, right? Short trade, you can find these signals here. Active trader, right, for today. Walmart was, I think, Monday. Moody's, I looked at the chart of Moody's, right? This is, I don't like that it's low volume stock, relatively. It's less than 1 million, right? And people sometimes complain, then why do you even put them? Well, it's a signal. Everybody has different criteria of what they trade. Like I know Bob doesn't mind trading, stocks under 1 million. So if it's strong, doesn't share trading, so you have to be careful on these low volume stocks. I personally don't like to trade them, But a lot of people, if they find this pattern that kind of defies the, indexes, then this is, if you trade small, I think this is good. I do like energy. Despite itself in energy, this oil and gas pipeline, ONIAC, is actually doing great, right? It's also defining the gravity. So let's put that here. We do have a Medtronic spread, 80. So we got close to 88 yesterday. So we're at 86.31. It's another position. So OKE was a signal, and then Procter & Gamble. So again, I don't see Magnificent Seven or any other stocks like in a strong uptrend. So for now, still people are defensive, right? They're buying Procter & Gamble. They're buying Coke, they're buying Moody's, something that can withstand the recession, right? And those are the stocks that are in strong uptrend, right? So whether it's XLP breaking out, right? XLP just relentlessly going higher, right? People are hiding in XLP, overbought. XLV continues to trade higher, right? So your healthcare stocks and your utility stocks. Usually these are signs of risk off, right? Because people buying Procter & Gamble and they're selling Bitcoin, well, that's a risk off trade, right? Nobody wants to take a lot of risk going into September. Okay, that makes sense. So you can find these trades on Active Trader or on Yellow Tunnel. Sometimes there's more signals than just 3, right? And some people like more. If you're a more experienced trader and you run your portfolio, obviously want more signals. If you're starting trading, you don't want to be overwhelmed. So 3 is more than enough. But same information or similar information you can find under Aggressive Power Trader in yellow. So Walmart was one of the signals. I'm out of Walmart, right? I'm out of Walmart. Consumer staples are continuing to go higher. Walmart kind of following the suit. I mean, it was pretty brief trade, right? And I'm out of, I closed half of the position yesterday and the other half of the position today, which is a nice price, 1% move in a short period of time. I did trim silver yesterday, right? Silver continues to rally. I was buying silver on the way down. Now it's probably overbought, so I trimmed position. I'm still in silver. I still think long-term silver is on strong uptrend. Obviously, this is pretty bearish price pattern. Short-term, it's pretty bearish price pattern, but long-term, I think the long-term trend is intact. Right. And I think we kind of broke this down channel as well, right? This wedge that we're going lower, and now silver going up. Right? Kind of trading together with the spiders, trading opposite of dollar, trading opposite of yield. Right? Inversely correlated. So I think silver long-term probably will revisit 29.30 this year. But short-term, it could have, it's overbought. So I trimmed the position yesterday. It got triggered. Cisco spread. I'm also out of the Cisco spread. Right, this was from Monday. So I was able to capture, I think, 20% short-term trade. I wanted to do it for October. I don't know what happened, but I think right now opening September positions doesn't make sense. So I wanted to quickly get out of the trade. Was able to make 44 cents. So 1%, 10% profit. Sorry, 50 cents. Almost 20% profit. Almost 20% profit. Maybe roll it into October because I still think Cisco in the money trade was that large position, and it's kind of gravitating toward that $50, right? So open interest is extremely important, right? It was high open interest before the earnings, and just it's acting as a magnet, right? Until we have some kind of expiration, right? The maybe September contracts expired, people are staying at that 50 level. So this is where you sell your calendar spreads, you're buying in the money call spreads because you want to take advantage of time decay. You want to take advantage of time decay. Any questions on Walmart, Cisco? And QQQ, I did close QQQ put spread. It lost more than half of its value, so I'm out. Medtronic, 88 call. And we got close, but it did pull back. So we need another leg up, right? We need Medtronic to get back to the 88 and above level. It's Wednesday. We do have 3 more days, but time is running against me, right? Running against me because it does expire. Sorry, it does expire on Friday, so it's an August expiration. Any questions about the trades? Let's see. So I did close Walmart, I closed Cisco, so maybe. I mean, I like these patterns because you have a breakout, right? You had earnings, right? So, strong earnings and a breakout of all-time highs, and you have clear support level, right? Is this level. Give myself a little bit more room, but so 2%. I would use 2% stop loss. If it drops below 85.8, and it will be close to 50-day moving average, my goal would be to be down only $100 on $10,000 portfolio, right? I want to only risk 1% of my portfolio. And then if it does drop, then I need to decide, okay, is this like another carry trade? And, it's better to sit on the sidelines, or, nothing has really changed and this is an opportunity and I want to invest, right? So something like that. So let's put on this trade. And oil is also oversold. So, energy is oversold. How's UNG gas doing? Yeah, extremely oversold. So, these guys are doing something right. So buy, and volume is low, right? But at least it averages 3 million shares, which is a little bit better, right? And it's fine. 3 million shares is fine. So I set 2%, $1.50. So what is it? So I don't want to risk more than $1. So I want to be down $100 if it hits $1.80, drops to. So maybe 40, 50 shares. Right. I mean, you have $10,000 account. You don't want to spend majority of it on one trade. So, but that's how I would do the calculation. You can say, Vlad, I have a smaller account, less risk tolerance. Okay, 50-day moving average, right? If this level doesn't hold, then this level is much stronger, right? The 82 level. But then you have to use $4 stop loss, which is 5%. So you use either 2% stop loss or 5% stop loss. If you only have $10,000. Using $1.50 and buying, let's say, even 50 shares, that means half of your account is in this position, and you probably don't want that, right? So then I would say, okay, let's use 82, $4, and then I can buy maybe, still don't want to be down more than $100, so 100 divided by 4 would be 25 shares, something like that. Okay, so this is part of Elite Circle. And then same thing as Walmart. I would just put orders. One order I would try to capture maybe 1%. 1% would be 80 cents, right? So 87.60. Let's see if there are any overhead resistance. Yeah, so it's right here, 87. Right, if it revisits yesterday's high. So 87.60 would be half of the shares. And the second half of the shares look for Let's see, Walmart, was it 1% that I put or 2? 73.56, 75, $2. Oh no, so it was more than 2%. Okay, so I did actually better than I thought. Okay, $2. Well, not me, model. I don't want to say me. Model was the help model, identified the signal. I just took it, decided to. Okay, so this was 2%. So same thing. So look for 1%. Wait, what happened? Right, and 15 shares. So look for 1% profit, and then look for 2% profit. And in general, we're going into September. August, I think we're okay, right? I think Jackson Hole, obviously it's a risk, but I assume Powell is not going to say something that will spook the market. He needs to be very careful, especially before the elections. I'm a little concerned about Bank of Japan, but they already kind of, it's a recency bias. They already got burned 2 weeks ago. I can't imagine they're going to say, well, now we're going to raise interest rates. Now that, everybody buying Nikkei market, we're going to raise. So because of the recency bias, I don't think they're going to do it, right? But, it's obviously, I don't know how much my opinion weighs. But anyway, but it's a risk. It's definitely a risk. But I think August is going to be bullish sideways, maybe neutral, not bullish, but neutral. And then, September expiration, usually these sell-offs happen during expirations, right? So September, when VIX expires and September position expires, right? Let's look at gamma. Let's look at gamma. No, SMS messages are working. So just to remember that you can always, in every service on Yellow Tunnel and Tradespoon, we have that SMS settings, right? So in SMS settings, you can put your phone number, click on submit for each of the, some people want all services, some people, but if you want it for each service, you would have to click on submit button. So just remember that we do offer that. People work, people are busy. So if you just want to get a phone message when I trade, then you just remember to put SMS. And a lot of people don't do that, and then they ask, I don't know, you have that feature. We put it in every email, so just a reminder that if this is something you're interested in. All right, so once September rolls off, because September now people are still have that recency bias, and they are hedging, right? And actually September got pretty high open position, and now at 540, right? 40,000, right? That open interest continues to grow. So at this point, 540 is pretty well positioned. I don't think we're going to break it before September expiration. So we have a clear support at 540. Assuming no new information arrives, like Black Swan event, right? Like that Monday to me was a Black Swan. Everybody knew about it, everybody talked about it, but nobody could time it. Right, just like next time you have a carry trade fiasco, nobody can time it to specific. It looks like it's over the weekend, so you might want to be careful, But anyway, but once September rolls over, October, very sporadic, right? Not a lot of positioning. You have a little bit at 540, 15,000, not a lot. Right, and then it's just kind of all over, but pretty far apart. Right, you have 520, 500, for 90. So not a lot of positioning. You can see the total gamma is a lot less. Actually, let's look bar chart. It'll be interesting to see the bar chart. We're building new tools for. Okay, never mind. Let's see options. Let's see spiders. Gamma levels. Okay. And then let's look at. Oh, he actually changed. That's pretty cool. Let's do September versus October. Okay, show chart. Yeah. So that's what I wanted to show. This is good. So total gamma, you can see, right? I mean, you can see puts versus calls, right? But you have a large position in September, and once VIX expires and equity expires, well, nobody's hedging, right? Nobody's hedging these levels. And you can see where the strike prices concentrations are here too. Let's see. So you have not a lot of positioning, right? Well, this is, let's see. Oh, 1018, 920. Oh, that's right. $555, 5. Let's do all. So 540. So you can see the large position is at 540 for these strikes. Let's see. 20 is better. Oh, yeah, we got a little more 50 strikes. 40, right? 540. And I mean, there's some position at 530, some position at 520 that we talked about, but that's the peak, right? You can actually see calls versus puts, right? So this is people, yeah, you can see the total volume. So, okay. So I'm glad this is working, but this is a good illustration of what happens during, why it's important to look at the expiration, right? Because you can see that, in terms of relative size, how the gamma can, how the option expiration in September can influences the October. So this should be, I mean, right now this is just in development, but it should be in production and bar chart sooner than later. All right, any questions on this gamma exposure for different expiration months and why Apex is important? And then any expiration in terms of which levels are well positioned for spiders. Costco 890. Okay, sorry. Let me finish. Okay. So filled at 87.60. 1%. So 2% would be $1.50. That would be 88.80. A little bit less. 88.80. Where's the high? Let's do it at the high, 88.50, 88. Yeah, 88.50 would be 2%, right below that high. So let's put that order 2. So we talked about stop level, we talked about target gain or OKE. Okay. Let's quickly go over other positions. So eBay, I still have eBay. It's been a while. I'm not sure if I want to continue to hold it. It's been 2 weeks. I mean, probably counter spreads is the way to go if you want to do options, but this was more of a stock. So I'm going to close, right? It's not going anywhere. It's been 2 weeks. I think we need a new signal. I mean, still captured 0.5%, so that's fine. Actually, let's try to do a calendar spread on eBay and see how it works. So same thing, we can go in here, type in eBay. Okay, so by default, we're selecting the weeklies, the first 2 weeks and first 2 months. This is where the high concentration. And you can see strike is 56. Strike 56, well, that's pretty close. Next one is 55. So not a lot of positioning. Most of the activities, or most of the gamma positioning is in September. That makes sense. Quite a few in October. So in terms of strike prices, let's see. Well, 56 is pretty well positioned. 55, so 56, 55. Let's compare that here. Yeah, you don't have any position, a lot of position up until 50 strike. So here it's very small. 50 strike. But again, much smaller than September 60 position. Yeah, so most position is at 60 call, right? So we have this large call styling at 60. So you have overhead resistance. We know there is a lot of overhead resistance at 60, meaning that it will be hard for the bulls to break to the 60 level by end of September. On the downside, you do have large position at 56. 56 is here. And then also at 50. Not sure why this is a lot less, but 295. This is 2 points. And this is 920, and then let's see, 1018. 1018. 920. And here's 600,000 versus 3, so 5 times or 6 times more. 6 times more. This is 295. And also 6 times the difference. But okay. So strike 50. Strike 50 is position not. I mean, you have 56 and 55 basically, but after that there is not much positioning at 56 and 55. So I mean, 50-day moving average. So I think we're gravitating toward 55 strike, right? 50. I mean, relatively large position, but obviously 56 is much better. So let's assume that 56 is not going to be broken anytime soon. So let's see the calendar spread. So I can go into it's the weekly September 6th. So before, right at the Labor Day, or let's see, 56 put. So I can sell September 56 put for 60 cents or 30th for 50 cents. Okay, so let's sell 56 and we can buy October 55 for $1.23. Okay, so sell 56 and go to the September monthly. $56, October. 55 is $1.23. So it will cost me 60 cents. Okay, 1% is at risk. Okay, that works. Limit debit of 75 cents, a little bit more. There's no 56 strikes in October, so I would leave 55. Let's see what I can do here. On the account, so 56, fine. So debit of 70, let's see, 75, 73 cents. So I'm buying more expensive, selling less expensive for 73 cents, buying 75 cents. Right. So if I don't think the stock is going anywhere, right, kind of trading sideways, then, I mean, calendar spreads is one way to trade it, right? So I'm basically selling 56 put with the idea that nothing is going to happen by end of August, right? In the next 2 weeks, nothing's going to happen, right? And eBay will stay above 56 level, right? eBay will stay above 56 level because our friends at Bar Chart show that there is a high open interest at 56 strike. The highest open interest is at 56 strikes. And then 55 is also well positioned, right? Also well positioned. So, and there is not, that this gamma will just expire, right? That the premium will expire by August 30. There's not a lot of positioning. But going into, after people come up below 56 level, right? That this level will not actually hold, especially once these contracts expire. Once September contracts expire, you already see October doesn't have as much positioning, right? So then I would, that this level will not hold after September expiration, right? Because if I remove September expiration and just leave October, not a lot of positioning, right? So there's not a lot of interest, and people are going to be vulnerable, right? So then I hold the put. All right, any questions? Amazon. Amazon is 181. So it's behind, right? It still hasn't breached the above 50-day moving average. It's still below 50-day moving average. It's right at that breakdown level. So Amazon is still weak, weaker than the other Magnificent Seven. LA Lily ready to break out. Yeah, I want to buy LA Lily. What happened to that? I think I'm late to the game. It did pull back. So I did close LA Lily for this reason, right? Double top. Two things will happen, right? It's either going to drop to 50-day moving average, right? Or it's going to break out. So you just wait, right? I mean, it's a strong stock. I'm not sure if I'm not going to short it. But if it breaks above 960, then I can reinitiate this trade. But for now, it's overbought, right? It just went from 760 to 960 in 2 weeks. Obviously, market doesn't move in one direction. So I think it makes sense to wait and see what happens. Victor, Meta is strong, right? I do like Meta. It's at all-time high, but same idea, right? You wait, right? It's overbought. It went from 200-day moving average to all-time high in less than 2 weeks. It makes sense to wait. There's two things that are going to happen. It's either going to break out, confirm breakout, and continue going higher. Then you can jump on Meta. Or I'm right, and we have some kind of, when people come back after Labor Day weekend and you have September OPEX expiration, which is probably the most, the highest probability of correction usually is in that September OPEX, right? For the reason I just showed you using bar chart, right? Those gamma exposure. So once that gamma leaves during September expiration, October might not be enough to hold these stocks. So then I would say Meta. You wait. All right, guys, you're awesome. Thank you very much. Have a great day. Thank you on Discord team. Thank you for participating. You're the most loyal group. I love it. Always same people. Roster cheer blossom. Mark letters. Thank you very much. On Discord. On YouTube, thank you for participating. Please hit subscribe, like if you like the videos. If you think they're helpful, do me a favor, share them on social media, and obviously our members go to webinar. Thank you very much for participating, and I will see you tomorrow. Thank you.